Let's now connect with the Group CFO of India's biggest real estate company, that is Mr. Ashok Tyagi, Group CFO DLF. He joins us live from New Delhi to talk about the new new REIT norms which have been introduced by SEBI. Mr. Tyagi, good morning. Thank you for joining us. I guess my question my introduction, I guess, was the question in itself. What do you make of the new SEBI norms on REITs?
Okay, so honestly, Nikunj, this is a very good step in the right direction. One's been hearing about these draft norms for some time, and so it was good that they've finally been released. But as you'd appreciate, that there needs to be a series of regulatory steps which need to flow in to make REITs a reality. And while the SEBI draft is one step, I think there will need to be, I presume, some consistent steps taken on the taxation front, and maybe some other clarifications to ensure consistency with the FDI policy as well. But all in all, I think this is a very good step. It will go towards giving a new investment tool for a class of investors. It will also obviously lead to some degree of capital formation from a real estate development standpoint. So all in all, a good step in the right direction.
Mr. Tyagi, but in the past, DLF has failed to raise money via the REITs route. This time around, are you seriously considering that option?
No, I don't understand when you say failed to raise money by the REIT route. The fact is REITs were not regulatorily possible in India. So this is only the first time that we are taking steps towards making REITs a regulatory possibility in India. So hence, there was no question of raising money through a REIT structure in India so far.
Hi, Mr. Tyagi. Morning. How is the traction currently in the NCR realty market, and how has the response been to Crest and Camellia's projects of yours?
Okay, so Crest we launched, I think, in Q1, and Crest was an excellent success. I think we launched about 250 odd apartments, and we sold most of them. I think all of them now as we speak. Camellia's again has been soft launched to a very encouraging response. We have had other launches in the New Gurgaon area as well, which again have done well. So while the overall demand situation, obviously is not hyper enthusiastic, the fact is that we still believe that if you locate the project right and price it right, there is untapped demand that is waiting to come in.
You also had sold some non-core assets in the past 1 or 2 weeks. What's the plan now for deleveraging? Which are the assets that you're currently planning to put on the block?
Okay, so yes, I mean, in this fiscal we have sold off our wind farm assets completely. We did a couple of divestments of the insurance piece, which is partially done, partially needs to be done because of the IRD approvals in place. We sold off our stake in a joint venture that we had. So we've been doing these things. We began the year in terms of fiscal 14 with a certain debt level, and we gave the guidance to the market that by March 14 we should be ballpark 17,500 crores in terms of net debt. We feel pretty confident that we should be able to achieve those numbers.
On an operational basis, are you generating enough cash flow which will help you to reduce your debt, or the only way you will be able to reduce your debt in the short term is via sale of assets?
So our target, honestly, for the medium term, which means the next 4 to 6 quarters, is that operations should be completely break-even, including, providing for capex, whatever minor capexes we need to do, or minor land that we need to buy for contiguity. And for reduction in net debt, we should be looking at the drop in the divestment of net assets, of these non-core assets. Also, as you see, Nikunj, with a target of 17.5 by March, which hopefully, we have mapped out completely, of that 17.5, our rental assets, take care of in excess of about 11 to 12,000 crores of debt, which is, completely serviceable on a standalone basis by the rental assets that we have. So then, across the next 2 or 3 years, we have a challenge of reducing the 5,000 crores of debt that still needs to be supported by our sales and development operations, which obviously, we'll try to keep on working on.
Mr. Tyagi, what DLF has sold this year are small non-core assets. You've not sold a sizable non-core asset, namely Aman Resort. Is that deal on the back burner?
Okay. So we have sold the wind farm assets, which was in excess of 800 crores. So that wasn't exactly small. Amongst the bigger assets, you are right that the Aman Resort is the one which, which we are waiting to conclude. No, it's not on the back burner. In fact, on the contrary, in the last 3 to 4 months, there has been renewed interest from prospective buyers onto the deal. And as we speak, there are some very serious dialogues going on. So we are hoping that we should be able to conclude it, shortly. And I wouldn't define the word shortly, but that is very much, center stage for us.
Define who these prospective buyers are then, Mr. Tyagi.
No, I wouldn't be able to divulge the prospective buyers to you, Aisha. I'm sorry.
But can we expect the Aman Resorts sale to happen post the calendar year close?
Well, we are definitely looking to conclude it this fiscal.
Markets had a sense of valuation on the Aman Resort deal. So whatever deal numbers were discussed last time, will the new deal be higher or lower?
Well, the new deal should definitely be at par with what the numbers that were discussed in the public domain last time. We are seeing if we can do marginally better, but definitely not lower than the numbers we were discussed last time.
Give me a sense of what is exactly happening to the real estate market. The newspaper headlines are indicating that demand is low, inventory is high. What is your experience there?
Okay, so demand clearly, the demand is not as enthusiastic as it was, maybe a couple of years back. That is a fact. From an inventory standpoint, on one hand, one obviously looks at what the newspapers are saying. But if you look at us, we really don't have any significant unsold inventory of finished or even WIP apartments. So, we launched Sky Court, we have sold Sky Court. We launched the phase 1 of Ultima and phase 1 of Crest. Those have been launched. Camellia is anyway a soft launch, which which is anyway, proposed to be sold across a certain period of time. But yes, that is a fact that if one reads the papers, there are some unsold stocks, or at least some pockets of unsold inventories in certain geographical pockets. And the demand, is not as strong. The withdrawal of the 80-20 scheme by RBI, obviously also has sort of had a hand in further moderating the demand, especially of young professionals who wanted to buy, etc. So I think these things, unfortunately, will take some time before they fully come back on stream.
Okay, Mr. Tyagi, good chatting with you as always.